Hey Forex Militia, this is Parsival, and we are going to go over the calendar for the week of the 27th to the 4th. This is my weekly outlook, and here we go. Alright, starting on Monday, we have the Aussie, the end of the month basically, the Aussie cash rate, which is going to be left at 10%. They're not raising rates just yet. And then we have the CAD GDP, which is big news. That's as indicated by the folder. And then the Aussie GDP on basically March the 1st, change of the month. Okay, next coming up is OPEC is basically having a meeting. So they are basically going to be looking to see if they're going to increase or decrease. Something big definitely happened last week, which is the invasion into the Ukraine. So I'm wondering if Russia is going to attend that OPEC meeting, if there's going to be anything coming out of them. Big sanctions came through, and I wonder if there's going to be some type of exclusion of Russia from those talks. So we'll see exactly what happens there. Now we've got the ADP for the non-farm employment change, and then the Loonie has the rate decision, which they are going to be. It's expected that they're going to raise it by 25 basis points to 50. So people are tightening up, and then Fed Chair Powell testifies at 10 a.m. on Wednesday, and then we have Powell basically testifying again on Thursday. We have the unemployment claims, ISM, and the Bank of Canada government. Mackel speaks, and then on Friday, the big news is the non-farm payroll, which basically is supposed to come in at 400K, right? And then and the employment rate, which is looks like it's supposed to drop to 3.9. All right. So with that, let's go to the charts and see what we can see. All right. So because of what happened with Russia and the Ukraine, the dollar spiked, and it spiked up to this area right here, 97.50, where I have this zone and this monthly resistance line. It hit that and it retreated. So that's some indication of some institutional selling. It hit that number and it sold off quickly. So that's very interesting to see. So most likely it's going to hit this area again, and we'll see if we get another wick. Looking for selling of the dollar. So let's go on to S&P 500. The S&P 500, because of the invasion, wicked down, came all the way down to, let's see what the low is on that. 4106.69, and then it basically rallied back up. So that's buying at that level right now. Now something else is going to happen in March. The rate decision for the US is going to come through on the 16th of this month, and so that's something to basically watch. I will go over that when that week comes up. On gold, because of what happened with the invasion, it spiked up. It hit this. It hit 125. It hit this area right here, 300, and around it spiked up to a 174, and then it came back down. So my outlook on that would be, actually, I'm not sure. I think it's going to basically it's going to consolidate a little bit more. Okay, so I'm gonna go consolidation on that. On Bitcoin, this was a surprise because I would have thought that Bitcoin would have rallied with gold. But like I said in last week's, it's been moving with the markets. So when the markets spiked down, it did also, and then it rallied. So expect Bitcoin to really start, instead of moving with gold as a safe haven or a store of value, start to watch it start to move with the markets. All right. So my call on that is, if the markets continue to rally short term, it'll rally. I believe it'll rally with the market. But as depending on what happens on the 16th, it will fall. If it's 25 basis points, it will probably rally. That's what's to be expected. If it's 50, that's a higher tightening. It'll probably fall. It'll probably fall. But my overall, my long term on the markets and on Bitcoin, because it's following together, is bearish. All right. So oil spiked also. It almost hit $100. It's at $99.95. It hit that high up there. All right. And then with it basically came back down. So we shall see what it basically does if it actually gets back up to that $100 mark. But right now it looks like it might actually start to fall because there's divergence. So I'll be looking for it to basically retreat, to decline back down to an area of about 76 or something like that, depending on what OPEC basically says. All right. The loonie, because oil is basically declining, and the rate, they might price that in before the rate actually comes down on Wednesday. So the loonie might actually decline, going towards the CAD, going down, and most likely into an area of where this monthly support line is at 124, 125. All right, in that area right there. So I'm looking for this to basically fall. On the euro basically spiked down and came back up, and as you can see, it's still in this area of a consolidation. So it's not really making any big moves in any direction. So I'm going to go with just neutral flat. And the pound is basically also doing the same thing. It's basically consolidating in an area. So no big moves out of that. Short term, I still believe short term that the pound is going to rally, right? But my indicators are saying that the momentum is bearish, right? I believe it's going to try to rally up to here, but I believe it's going to probably bounce off of this area down here at 130, somewhere in this zone right here, and then rally up. All right, so that's the cause for that on my on the dollar, S&P 500, gold, Bitcoin, oil, the CAD, and the euro, and the pound. So with that, we will move over to the Trademiner picks of the week, and I'll see you over there. One other thing, I did forget something. Something that I should go over is what happened on the ruble because of the war that basically went on. As you can see, ever since they were basically talking about invading the Ukraine, the dollar against the ruble has basically rallied. And you got this big spike up here, right? And now you see it down here where it basically came down and it filled up this gap. And this gap happened when they announced that they were invading the Ukraine. So that's something to basically watch. If you wanted to basically get a pretty decent direction on that, with the sanctions coming through and everything like that, a dollar against the ruble looks like it's going to rally higher. All right. So with that, I will cross over into the Trademiner picks of the week. All right, here we are on Trademiner Forex, and we have a bullish British pound, New Zealand dollar. Okay, I didn't do the neural network, but the score on this is 3.36, and the win rate is 83%. All right. Later on, of course, we're going to go to the charts, but bullish. Right. Pound Kiwi. All right, and then we have Walmart. Now, Walmart is one that I said I was going to basically do because this also showed up on Trademiner. Trademiner also has this going from February the 18th to April 16th. So I'm going to basically, that lines up with what Trademiner is basically putting forth also. This is on March 1st to the 29th. I believe it's to the 29th on this one because I only have this a search loaded up for only 25 days, but Season X has it for a little bit longer. So I put it with the longer date up until April the 16th, and this is bullish. Okay, so they're lining up on that. 27 years, 4.27, 81.48. So that basically is over 27 years. That's a pretty good record. Okay, so let's go ahead and take a look at the charts to see how that looks. And over here we have the pound. The pound Kiwi, and that would be, like I said, on March. It should be on the 1st, right? On the 1st, right? Now, here's the thing about it. This is one of those trades where it's like risk on, right? Because as far as I'm concerned, the pound and the Kiwi are both risk-on currencies. So I usually look to take the trades that are actually risk-on, risk-off. You know, the dollar pound, the Kiwi dollar, and the Aussie against the yen, things like that, Swissy stuff, blah blah blah. So, but this one is a little bit different, and like I said, this one is bullish. So we're basically going to look to take half of this because it doesn't look like this is going to be a bullish trade. It's most likely going to fall before I would actually try to take the full position going long. But we shall see, because what possibly is going to happen is the stock market might start to rally, and it'll be a risk-on type of trade going forth for probably up until the rate decision, and then we'll see what type of volatility actually happens at that point. So that's pretty interesting. We'll see what happens then. That's up until the 16th, and then we have Walmart, which is, I put that on a daily, yes, okay, which is from the 28th up until April the 16th. Over here, there is no 16th, so that's a 14. All right, so we will basically look to be taking this bullish, and it looks like this is a half of a trade at first. I'll basically look to see if there's some type of change in the technical direction to take the whole thing. But I'll take half as on the blind trade, on just the Trademiner trade, on the statistics, and then I'll look to see if the technical trade actually lines up also. So with that, let's go to the review. And on the review, it was looking pretty good when on what was it? On the day, the markets really tanked, and it looked pretty good. Looked like we were going to get some tap out, some for us to hit some targets. It almost did. I was up 7K. Now it's back down, but it's still in the green right now. But I do believe both of these are actually short, right? So, but I do believe that the market is actually going to rally. So this might go into some drawdown going into this week. American Express, I should have actually come out of this. I did not come out of it, and I would actually take a gain on that. As you can see, I can actually leave it a couple of days, but to be to keep a line of proof of concept for the Trademiner, I would have come out at 188, and it rallied it a little bit more. So I will take that out. Then work. This is an old trade. Interestingly enough, wow, it fell, but this is going to come out as a loss. So on work, that's going to be a loss, and this is the new trades. So let's just take a look at, that was the Aussie yen and Disney, right? So we just went over Disney, and let me just take a look at the Aussie yen, which is here, and that right now is a short. And like I said, I believe during this week it's going to be a risk on, so this might rally a bit further before it actually drops again. I still believe that the market is going to fall, and we are going to see well, actually we're basically going to see if the Fed raises rates by 25 or 50. Will it be a higher tightening because, you know, emergency, inflation is out of control in the U.S. As seen by the CPI this month, right? So will they actually, you know, do an extra tightening? So that's basically going over the picks and the review for this week, and we are going to sign out. Knowledge is power. Be power hungry and power to the people. If you like this content, please like this video, leave a comment, and subscribe for new content. I'm posting these every week, and I am basically going to be working on other content to basically get out to you. And so this is Parsival signing out.